Hi, and welcome back to the WHVP podcast. On this episode of the podcast, the team sits down to discuss the Swiss Financial Center. When we discuss the Swiss Financial Center, we'll discuss its history and how it rose to become one of Europe's and the world's leading financial hubs. We'll also discuss the benefits it provides and services it provides to American clients hoping to expand their wealth structure and investment portfolios. Before we get into that, we will discuss the awards that WHVP received this year from the Wealth Briefing Awards Switzerland. After that, we will discuss the news of Russia invading the Ukraine and how it has been affecting Europe as a whole and the markets in Europe. Now, let's get into it. Welcome, Jamie Norris, back to the WHVP podcast. Finally, it's all three of us again. It's been quite some time, but we're excited to get going. Today we're going to be talking about the Swiss Financial Center, and kind of how it's developed and its strengths, advantages, and maybe some of the myths and what reality is about it. But before we get into that, we've had some exciting few weeks and start to the new year, so we're going to get talking about, as you can see if you're watching our video. If not, if you're listening, we have awards sitting out on our desk. So maybe, Jamie, you could tell us about these awards that WHVP has won this year.
Yeah, absolutely. So this is the second time that Wealth Briefing is giving out awards for the Swiss external asset management industry. And it is the second year that we have won several of the categories. So we are very proud and happy about that. We have won again in digital engagement, in client communication, and then also the female executive category. And I think it's a very nice accolade and it's a very nice confirmation that we're moving in the right direction. And of course, it's always nice to get some appreciation from the industry.
Yeah, definitely. It's been fun.
And also it has been especially nice to have the award ceremony in person this year, because last year it had to be postponed several times, and then in the end they just sent us the awards, and we had an apéro later on in the year. But this year we had like a proper celebration in Zurich, so that was very nice as well.
It was beautiful, yes.
Yeah, it was good fun, nice food. Yeah, cool. So we'll kind of jump into our news topic, which is going to kind of cover two things. We'll have to obviously touch on the sad development since we've had our last episode of the war in Ukraine and kind of how that's affecting what we do. So maybe, Urs, you could talk a little bit more about that, how we view that and how that's going for us.
Yeah, obviously we feel very sorry for for all the citizens, for all the people who live in the Ukraine and who are affected, especially with so many civilians that are affected. It's really horrible time, and when we look back to the last decades, no one would have expected that a war breaks out like this in Europe again, especially since we already had the First and the Second World War in Europe. So it's really difficult, and obviously it does affect the markets, it does affect the economies, and prices are going crazy. If you see nickel, if you see palladium, if you see wheat, it's just going through the roof, especially also oil. And on the other side, we are so thankful that we are in Switzerland, because Switzerland again manages to stay out of all of that. There was, however, one minor thing with the sanctions, where they eventually, the Bundesrat decided to take it over, which was, or still is, quite of a discussion whether this was the right move or not. But we do not expect that this will have a severe impact on our economy or on how the global political society looks at Switzerland.
I think to jump in on this whole sanction topic, it's quite important to note that Switzerland didn't lose its independence or neutrality. I mean, we have put sanctions on a variety of countries and economies over the past couple of years. It just has never been on a conflict that was so publicly talked about. And Switzerland still very much sees itself as a, like when it comes to military, as a neutral country. We are not part of NATO, which is, I think, especially important in that conflict. Neither do we desire to be. So if the war would get worse, and if more countries get dragged into it, Switzerland again will be one of the very few countries that wouldn't be involved in any sort of way, because we are not gonna get involved in any military conflict, whereas for example the US as a NATO founding member would have to eventually get dragged into the conflict if NATO or if a NATO country would get involved. So I think that's very important to know. And another point is also that even though it's, I mean, as you said, it's a devastating and heartbreaking situation, and our hearts go out to all the people that are affected, it's still something that shows the value of doing your due diligence on a financial jurisdiction properly. And we even got some specific requests of people who are now thinking more again where would be a safe place to store some of their money during uncertain time like these, and then Switzerland comes out on top again. I think that's something, I mean, that we will talk about more later on, but I think it's very important to make this distinction between economic sanctions and military neutrality.
I'll just give a real quick kind of historical rise of Switzerland and even their financial center and how that was able to come to be. I mean, in the early 1500s, long time ago, Switzerland was basically making cheese and clothes and was an incredibly poor country. So in their efforts to seek to raise money or even just get out of real poverty, they started being very un-Swiss as we know today, and using mercenary fighters to go and fight for different countries just to make a little bit of money. But they transitioned out of that as industry started coming into Europe. And this is something that has been a key factor in the Swiss economy and people for a long time is a spirit of entrepreneurship and the ability to be flexible to the times. And it's something that you can kind of see throughout history with a country that doesn't have any real natural resources like Switzerland. They're geographically located in a great place when it comes to Switzerland. They are a border to 5 or 6 countries, I believe. If we count Liechtenstein, we're at 6. Yeah,
I think we have to count Liechtenstein.
But major economic countries in the history of Europe. You have France, you have Germany, you have Austria, you have Italy. These huge major economic powerhouses throughout time, all border in Switzerland and need that road to connection. So Switzerland has been able to adapt and allow multinational corporations into their country, and for a long time have had 50% of multinational corporations based in Switzerland, or at least having a major hub in Switzerland, and that has allowed Switzerland to really kind of grow just the wealth on an economic level, but also build a financial center that caters to that globalized or the globalization of economics. And so that was something that really fueled Switzerland's financial center, was being able to cater to the wealthy and the big corporations that needed to use Switzerland as kind of that transit country. So if we want to look at the inflation ratio of Switzerland, or not ratio, but rate of Switzerland, if you look at the 30 years from the 1970s to the early 2000s, that's when you really see Switzerland really start to take off and grow as a true prominent economic powerhouse when you look at the population and the population needing banking services. And the inflation rate was, I think, on average 3%, so very healthy. And that's quite high if we think about inflation now for Switzerland. We look at less than 1% roughly, and sometimes we go into deflationary years, not high deflationary years, but very low, a very stable currency. But you see that they've had this long-term growth effect in Switzerland, and that's allowed Switzerland to really have their banking system remain stable, and that's been in part due to so many big companies growing up in Switzerland, and as well as the competition of outside companies coming in. And I think that's where the Swiss banking or the Swiss financial center really was quite clever, as they were able to cater to the needs of not only the Swiss market but also the global market or the European market to start. And today we see them dealing with multinational companies at a huge level. Some of the biggest pharmacy companies are in Switzerland, some of the biggest chemical companies are in Switzerland, the biggest coffee company in the world is in Switzerland. And these all add into the Swiss banking system to allow them to kind of grow and provide a hub. And one final point, which is quite interesting, is Switzerland has the largest market share of serving private individuals and wealth management services. That's roughly around 26%.
Yeah.
So they've not only been able to, build that strong hub with that background of businesses, but they've been able to target, and this is that entrepreneurial spirit of the Swiss people and the Swiss Financial Center, to target individuals to help deal with their wealth and to be really, really clever and clear with how they've done that. So Jamie, maybe you can kind of talk about some of the strengths and advantages that the Swiss Financial Center offers to those private individuals.
Yeah, absolutely. Before I do that, maybe also a couple of points to add to what you just said. I think it's very important to highlight that, again, we don't really have any natural resources, so we had to be smart in a way of using our services. And that has led to, I think right now, about 5% of the Swiss population work in financial services, and 10% of its GDP are generated in financial services. So those are huge numbers. And also when we look at the tax revenues that are generated in the financial services, those are between 7 and 8% as well. So it really is the backbone of the Swiss economy. The other thing that you mentioned, the cross-border wealth management, I think between a quarter and a third of international wealth is managed in Switzerland, and that's quite incredible if you think about that we are able to drive through the whole country in 4 hours, that we have 8 million people in population. That's I think quite a considerable achievement. And the way we did it, I think one thing that really started us off very well was the Bank Secrecy Act that was implemented at the end of during the Second World War. I mean, that has certainly helped a lot in beginning to grow the financial services industry, but that has changed quite a bit over the past decade or so. I think now there's other advantages to Switzerland that help us stay on top as a financial hub, if you so will. And I think that's really what we talked about earlier, that we are a very safe country, that we are a militarily neutral country. We have very high levels of education, lots of people going to university, very low level of illiteracy. We have great talent program from the large banks. So the number of large banks doubled since 2010. So we now have 4 versus 2 before. And those banks really invest a lot of resources into developing young talent. We have great universities that specialize in finance and economics. So all those things are certainly very helpful. Then I think it's also helpful that we're a country that, even though we're so small, we still have 4 national languages. So we have a knack for speaking foreign languages. Most Swiss people speak English quite well, at least well enough to use it for business and to talk to English-speaking clients. So that's helpful as well. What else do we have? Not just the political stability, but also the economic stability. That's another very important point. I think Switzerland has one of the highest GDP per capita ratios in the world. So we are quite a wealthy nation. And then also that we're just from our, I would say from our personality or how we are as a nation, we are quite conservative. We don't usually take huge risks, even though we are seeing now a larger startup sector emerging, and we see a lot of financial fintech startups that are coming out of Zug and Zurich. So I think maybe that's changing a little bit, because taking risk, as Americans know, it can be a good thing as well. But yeah, we are quite, I think, reliable. We have a long-term approach, and those are things that well, you might just think that that's my opinion, but we also see it in like public votes. For example, a couple of years ago, we had a public vote on like increasing the minimum amount of vacation from 4 to 5 weeks. And everyone is always so stunned when we say, well, we voted against increasing our like mandatory vacation, because people just have this long-term economic view of saying, well, it's great if people or if companies can and want to give more vacation, but it could break some smaller companies, which would then in the end make it more expensive for us all. So this kind of long-term approach and the understanding of economic connectivity, I think that's something that we shouldn't be taking for granted.
Yeah, especially because it allows the competition to remain high in Switzerland among the businesses, and that's where innovation comes. We see these startups, these companies, really wanting to compete, and I think that's a big portion of the financial system, that there is a lot of competition in the financial industry area, and that creates a good market for innovation and staying ahead of everyone else.
Yeah, and I think also another good thing is that we are not becoming complacent. So we are still continuously thinking about how can we improve our financial center, how can we become more attractive to domestic and foreign clients. So one example is the last podcast that we did together was about the Swiss trust law that is now potentially being introduced. So I think the government as well as the population keeps on thinking on how can we stay attractive, how can we stay competent, and how we can we stay on the forefront of what we do. Because I mean, we have to be honest, the past 10 years financial services have changed a lot. International regulatory laws were introduced. We now have here domestically also some new regulatory changes that are taking place this year and last year already. So I think it's important to really stay innovative and try to continuously improve what you do and not just be happy with the success that you've had over the past couple of decades. And I think Switzerland is doing a decent job at that.
Yeah, I think so too. And maybe another point, especially when it comes to the regulation, it is important to see that it takes a long time in Switzerland to get to new regulation, new laws. I mean, for example, the new laws that came in last year, this year in Switzerland, they started to work on these laws in 2012. Yeah. So it took them 8 years. And during this time, already in 2008, 2009, the US came out with new laws for new regulation, the European Union came out, and the Swiss policy, or the politicians in Switzerland, they have an attitude that they look out to other countries and look, okay, what do they do? Does it work? What does work? What doesn't work? And then they develop the laws, and then eventually we have much better laws, and it needs much less adjustments than it would need if we just rush into something and say, okay, now we do what everyone else does. And also with the trust law, when did it start to?
Oh, they started with like petitions on like years ago. I think has also been in talk for 10 years. But I think to add to what you just said, the policy making process here is set up in a way that they, like politicians, have to talk to experts and practitioners, and that makes a huge difference. So as an example, we are part of the Swiss Association of Wealth Managers, and that's one of the largest industry associations for our job, because we have over 2,000 wealth managers in Switzerland, and most of them are a small-sized company with less than 10 employees, so they don't really have a lot of power, but if they all come together, they can really change something. And this association that we're part of, they have really done a good job in talking to politicians, because the regulatory changes that they wanted to introduce, the very first draft, was very far away from what would be practicable. And of course, the goal is to protect clients, and I think that's something that we can all agree on, but it makes sense to talk to people who actually work with clients to hear, well, how can we set it up in a way that is feasible and that it can be implemented even by small companies. And that's something where, yes, I mean, direct democracy takes some time. It is not like a very quick fix, but as you said, I mean, it's in the end, it leads to solutions that have really been a good compromise for all parties involved and that can be implemented in a way that makes sense.
And I think it also does especially work in Switzerland because of the mindset of the people. Also with the small companies you mentioned before, I mean, they know what our reputation is and they know how easily you can damage this reputation. And
Yeah.
we are very try to be or to do business in a way that we can hold up this reputation of quality and of Swissness and of reliability. So even so, if you don't have the regulation from the very beginning, usually the small companies or the startups, they know how to deal with it.
Yeah, and I think that talking about the wealth management sector with 2,000 companies or asset managers, 2,000 companies is enormous for when you think about the population size of Switzerland.
Yes.
And I think that shows where, one, there's a lot of healthy competition. Two, they have the ability to come together and not create strikes or problems, but look for solutions. And that comes to your point, was of how the mentality of Switzerland is, hey, we're in this for the long haul. And so we have to figure out the best way to do this, to set this up with laws, regulations, even if you look at how people are paid or contracts are set, it's both parties looking to be fair with one another so that in the long run, the society, it functions, or your sector functions and actually becomes really strong. And I think those are huge points and aspects of some of the strengths that Switzerland offers. I mean, segueing kind of what we're talking about is those are strengths that the clients get to receive the benefits of. Yes. As we as asset managers work and try to set up these regulations and how we practice and kind of our standard of practice, that all comes out at the end for the client. That all comes out for what they're receiving. And how do you guys see that, as I guess that point of how the clients receive the benefits of that as an outsider? How are they able to kind of see that in how we do business?
And I think it's very inclusive, so that the association and also the regulatory authorities, that since we are such a small country, we have to look abroad and look how do other governments, do other industries deal with their situation. And I think that's also one of the strengths in Switzerland, that we have a lot of knowledge about how the regulatory environment is in other countries. And so we can take this into Switzerland and we can adapt it, and we can also comply with these kind of rules, because we understand, due to our international focus, that what people's needs are. And I think that's especially important when it comes to Americans, because the rules for Americans or for serving Americans are quite broad. But once you got through all the registration process and all the documents you have to, you will be able to provide a high quality service, where people or clients, for example, from the US have kind of a double protection, because they have the regulatory in the US which protects them, and then they have the regulatory in Switzerland, where they know, okay, Switzerland is a very reliable country. Switzerland took a lot of time, 8 years, to come up with this regulatory framework, so we can be quite sure that our money or our funds are in a safe place.
Mm-hmm.
Yeah, I agree with that. I think, well, hopefully the outcome is that clients feel that they're in good hands, that they feel that they are dealing with people that are professionals, that have the education experience that is needed to do the job that we are doing, that they feel that there is due process, that everything has a certain order, but at the same time that hopefully they don't feel overwhelmed by the administrative burdens. Because of course, I mean, we have to be honest, they have increased over the past couple of years. So the paperwork is more extensive. That's just a part of being more supervised, I guess. But hopefully they still see that the Swiss government, or we as an industry, try to keep the paperwork at a minimum. And that they don't feel that they have to comply with a lot of administrative issues that are not directly benefiting them. So that's where we have a very important role as being like the mediator between the government and the clients, where we have to do a good job in explaining to clients why which documents are needed and how they benefit from that in the end. Because again, most of those regulatory changes, the end goal is client protection. So one example would be for if a client wants to take some money back to the US, if it's a considerable amount, we will need an originally signed letter. Well, yes, it's a little bit more work. Yes, it can take a little longer, but at the end of the day, it's just a response to those cybersecurity concerns that we see internationally. And we believe that like the drawback of taking 10 minutes of printing something out and physically mailing it is smaller than the drawback of like you losing $50,000 because someone hacked into your emails. So I think that's very important to keep in mind, to just have this balance of like administrative challenge and benefits. And I would say hopefully we are striking as a country an okay balance at that.
Yeah, and I think Switzerland does do a good job with that. I mean, when you look at the whole Swiss Banking Privacy Act, Secrecy Act, it still affects us as workers. We still have to protect and do everything in our power and watch all of our P's and Q's to not share any information with our clients with outside sources.
Absolutely.
So that's something that I think is a really good point of where maybe people had abused it in the past. It's not abused, and the responsibility comes on us as the workers to really protect our clients. And so there's certain aspects of that law that haven't gone away at all. Yeah. Where yes, of course, if the IRS comes knocking, we have to provide, and that's part of being registered and working with American clients and paying taxes as American client. However, outside of that, that's it. There's nothing. It goes nowhere else between the bank and the client.
Yeah.
And I think that's something that's really important that people get worried about in the States. As an American, I'm always thinking about, if I give my information here, who is it going to?
Yeah.
And in Switzerland, that's something you don't have to worry about. You give your information to your asset manager, and it's between them, the bank, and you, and no one else. Thanks again for joining us on the WHVP podcast. We hope you found it enjoyable and insightful. If you would like to learn more about what we do at WHVP and how we might help you achieve your financial goals, check us out at our website at whvp.ch, or find us at any of our social media handles at LinkedIn, Facebook, Instagram, or YouTube by simply searching WHVP. Have a great rest of your week.